Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, August the 3rd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on. Some economic data today across the pond. Great Britain, we got services PMI came in line with expectations at 53.3. Here in the United States, we also had Great Britain's Bank of England inflation report and monetary policy statement, but none of that really making any moves, and their official rate stayed the same at 0.25%. Then here in the United States, we got unemployment claims, a little precursor to the non-farm payrolls that we're going to get tomorrow, came in line with expectations at 240,000. Then we also got our ISM, which is the Institute for Supply Management, PMI, which is the Purchasing Managers Index, came in at 54.7, expected to be 54.2, so slightly higher. Or sorry, that was the Services PMI, which isn't the widely looked at number. The ISM PMI number came in at 53.9, was expected to be 56.9, and that was at about an 11-month low, so a bit of a pullback there. Not really doing a whole lot to the overall equities right now. And then we got factory orders was at 3%, expected to be 2.9%, so slightly higher than expected there. Finally, we have natural gas storages come in at 20 billion cubic feet, expected 23 billion cubic feet, so a bit more of a pullback there, or a drawdown, if you will. Right, on to the overall markets. Crude oil moving slightly higher today, up about 14 cents on the day. This point of control moved. Remember yesterday we were talking about the volume point of control was down here. It has now since moved up to right where we are. So we've got a lot going on right here at this $49.50-ish dollar a barrel area for crude oil, which is going to now act as a magnet. It's going to be really a tussle between the bulls and the bears to get through this area now that the volume where the most money has exchanged is lining up. So we've got the 200-day moving average, we've got that fib level that's been acting as a major support resistance. Now we have the point of control moving to that area. So a lot of people are going to be very complacent in and around this unless there's something really in the market to get this moving. So could get stuck a little bit in the mud. On to gold. Gold can't bust through this Fibonacci level right here, and the magnet being just slightly below at 1255-ish, about $25 lower in a sense. But at the end of the day, gold futures were pushing lower, but on that economic data that was a little bit shaky coming out of the ISM, gold futures got some legs from that. Bonds also pushing slightly higher today, up about 17 points and above this 50-day moving average. Still in a more of a bearish trend, but this is going to act as a resistance area, this tweezer top, if you will. So Fed signaling rates are very close to neutral. Bonds probably are going to be a pretty lame trade. Dow Jones, again, new historical high. Now we are above that 22,000. Only just pierced it for a moment yesterday. Today, now above that area. A lot of volume being traded up here. So this value area high really pushing to the upside here. Right, you don't usually see the value area high sitting right on the highs, but we are with this particular one. There's a lot of exchange of money going on here as people are still pulling out of the S&Ps and the NASDAQ and putting their money into the blue chips of the Dow Jones. This is what I'm talking about with the NASDAQ not seeing its highs, but actually down on the day. Still an inside day for the most part from yesterday, but NASDAQ pushing a little bit lower off of its lows though. E-mini S&Ps, same situation here, down about 5 points on the day, just running right in line with the 5-day moving average. Trending sideways, nothing to see here. A lot of people probably jockeying and hedging up their positions ahead of tomorrow's non-farm payrolls numbers. So I'm not going to probably see a whole lot today. This is what I'm talking about with the inside day. E-mini S&Ps value areas are well inside yesterday's range of the value area high and the low, and their point of control is really lining up quite nicely. So it's going to be a pretty quiet day for the most part, I believe. All right, Philip Morris. The FDA came out and said that they were going to lower nicotine levels for cigarettes and things of that nature. So Philip Morris really got beat up, and it caused the volatility to really spike in there. They've gotten their earnings out. They beat on earnings. They're looking pretty good. At the end of the day, if the FDA lowers nicotine levels, I'm willing to bet that people are going to smoke more cigarettes in a sense, because that's just seems like if they want that nicotine, they're going to need to smoke more. So it seems like that's almost worse for the human being. But at the end of the day, that's not for me to decide necessarily, but I am going to take a trade on it. And I think that with this high volatility, we're going to see Philip Morris kind of settle down in these areas until we see the smoke clear in a sense. So I decided to go in there and just sell a strangle, taking advantage of the high volatility in there. And I went into the August monthlies and sold the August, what was it, the 357.5, 280 strangle. So sold the 280 puts. Oh, sorry, that was that was in Tesla. That was my Tesla trade. Sorry, I sold the 120, 100 strangle in Philip Morris. So the 100 level puts me well down here at this level. 120 is very close to the historical high. I think we're going to see a trend sideways here. So again, I did the Philip Morris in the September monthlies and sold the 100, 120 strangle. So just to get that clear there. Sorry for that mistake. Yum Brands is something I tweeted out yesterday in earnings. Did this in the August weeklies and sold the August 75 puts for 32 cents. Bought them back for 11 today. I believe that was 32 cents on those. 35 cents, bought them back for 11 cents. And then on to Tesla, the trade that I did at that strangle as well. Tesla wasn't really sure where they were going to go. I talked about this, that we saw a lot of these car sales coming out. Didn't know how Tesla was going to do too well with it. They were expected to come out with that loss of $1.80, only lost $1.32 a share, and the market celebrated that quite a bit. Stayed inside the market maker move. It was just outside of $20, so we're right inside that market maker move. I was able to go well outside that with the high implied volatility around this market, and that's the one where I sold the August 357.5, 280 strangle, and collected $2.22 for it. Bought it back for $1.32 on there. So I'm trying to also get out of my XLK trades. Those are pretty close, but and just have a working order in there in case we get a little bit of a move higher, and I'll be able to get that extra couple pennies I'm trying to squeeze out of them for 50% of max profit. All right, that's all I got for you guys today. Tomorrow's webinar is going to be a really good one, so check it out. We've been filling up these rooms, so you got to get in there early in order to be able to watch it live and participate in it. And I love it when you guys are have some participation in there, because I think you guys get more out of it, and makes it flow a little bit better in my eyes. All right, so if you can't take that, take it easy.